Hello there, YouTube. Welcome to the channel. Today, I want to do a quick video and talk about one stock that I think has a lot of potential to generate significant upside income, and a stock that you can also use what is known as the whale strategy to create even more income opportunity for yourself. All right, let's get it. Well, hello there, YouTube. Welcome to the channel. Today, we're going to quickly talk about a stock that has several potentials. On the one hand, it has the potential to generate strong dividend income. On the one hand, it has the potential to generate strong dividend income. On the other hand, it also has growth potential in terms of capital appreciation. And then thirdly, you can use this stock to deploy into what is known as the whale strategy to add to your income potential. All right, let's get it. So the stock we're looking at today is ticker symbol DVN, Devon Energy Corporation. This operates in the energy market. And if you quickly look at what it says on Yahoo Finance, the forward dividend yield for this stock is round about 9.04% per annum. This is as at the 13th of October 2022. And if we quickly jump into the charts, what you will find is ticker symbol DVN has been on an upward trend for a while. It's trended down since June this year, but it seems to have bounced back from the $51 mark and seems to be slowly going back to its highs. The other thing that you will notice is that it seems to pay good dividends every quarter. So every 3 months, we're seeing dividend that is not bad. In the last 3 quarters, as an example, it's paid $155, $127, and $1. That's a good return, which is why the forward dividend yield is set at a very strong 9.04%. That means that if you invested in Devon Energy today, you will expect to get an annualized return from dividend alone of 9.04%. But there is more, and that's what we will look at as well. All right, so we've seen that ticker symbol DVN can give us a return of 9.04% just on dividends alone. But like we said, there is more. Let's go to the options chain. And if we go a bit further down, say 1 month away from the 13th of October 2022, that will take us to round about the 11th of November 2022. Now, we talked about the fact that we can deploy the whale strategy. How does the whale strategy work? The whale strategy simply says that you sell puts on a stock at a price at which you don't mind owning those stocks. If you get assigned, then you start selling calls on that stock at a price above the price that you bought it. And if you get assigned, you start all over again and you sell puts. So if we look at the charts for DVN and we see what the trend is, and if we zoom in a bit, one could take a decision and say a good price to buy DVN would be on the $66 mark. So if we go to the options chain, and like we said, we go to November 2022, which is 1 month away from today, you can sell the $66 put that will expire on the 11th of November 2022, and you'll be paid about $2.29. Let's see what the analysis is for such a put. Right, here's the breakdown for selling a put on ticker symbol DVN on the 13th of October 2022 with an expiry on the 11th of November 2022. So as we can see, the start date for the contract will be the 13th of October 2022, and the end date will be the 11th of November 2022, which means this contract will last 29 days. The strike price is $66. What this means is if on or before the 11th of November 2022, the share price of DVN drops below $66, you have to buy those shares at $66. Now, if that happens, what will happen is that because you're being paid $2.29 today, your effective cost of assignment, that is the price you actually paid to own DVN at assignment, will be the $66 that you will pay if you get assigned, minus the premium, which is the $2.2, which is an effective cost for you of $63.71. If, however, the price of DVN is above $66 by the time of the expiry of this contract, the contract will expire worthless. And what this means is that you get to keep your premium in addition to the $66 per share that you would have put aside to buy 100 shares of this stock. What that means is that if you get unassigned and the contract expires worthless, you would have earned for yourself a 3.47% return on your $66 per share. And that translates into an annualized return on investment of 43.7%. That is not bad, especially in a market where a lot of shares are going down in value. There you have it. We've seen how one can look at a particular stock and you can identify multiple ways of generating value from owning the stock. So, on the one hand, you can buy the shares at a price that is reduced with the anticipation that the value of the shares will go up. On the other hand, we've seen the potential for earning significant dividend returns. And then on the third hand, we've seen how using the whale strategy, you can generate additional income for yourself. Be that as it may, like we talked about, if you do not get assigned and you end up keeping the premium, you can sell another put for a later expiry date. And if you get assigned, while you're holding on to the stock, you can expect to get dividend, but also generate additional revenue from selling calls on that particular stock. And ticker symbol DVN is a prime candidate for deploying the whale strategy of options because you have hedged the potential for a downside by creating additional income stream. As always, thank you for watching. If you've enjoyed the video and you haven't subscribed to the channel already, please hit that subscribe button now and smash the notification bell so that you get to see videos as soon as they're uploaded. And if you've got a question, do leave a comment in the comment section and we'll reply to your question. And if you think this has been useful to you and you know people who will benefit from it, do us a favor and share this video with them. You can also look us up on Instagram and Twitter for more content. Have a beautiful day.